Hi, today, we are going to talk about the current US debt crisis, what the US government is doing to avoid default risk, and its possible impact if the US goes on default on the global economy, especially on countries which are dependent on US dollar. The US national debt is the total amount of money that the US government owes to its creditors. The debt has been growing steadily for decades, and it is now at an all-time high. There are a number of reasons why the US debt has grown so large. One reason is the cost of wars in Iraq and Afghanistan. Another reason is the Bush tax cuts, which reduced government revenue. And finally, the US has been running a budget deficit for many years, which means that the government has been spending more money than it takes in. A US debt crisis is a situation in which the US government is unable to pay its debts. This can happen if the government runs out of money, or if investors lose confidence in the US government's ability to repay its debts. A US debt crisis would have a significant impact on the global economy. The US dollar is the world's reserve currency, and if the US government defaults on its debt, it could lead to a decline in the value of the dollar. This would make it more expensive for other countries to buy US goods and services, and it could lead to a global recession. In addition, a US debt crisis would likely lead to higher interest rates. This is because investors would demand a higher return on their investments in order to compensate for the risk of a US default. Higher interest rates would make it more expensive for businesses to borrow money, and it could lead to a slowdown in economic growth. The US government is taking a number of steps to avoid default risk. These steps include raising taxes, cutting spending, borrowing more money. The US government is also trying to work with Congress to pass a long-term plan to reduce the national debt. However, it is unclear whether these steps will be enough to avoid a debt crisis. The US government is facing a number of challenges, including the ongoing COVID-19 pandemic, rising inflation, and the war in Ukraine. These challenges could make it difficult for the US government to reduce the national debt and avoid default risk. Countries which are dependent on the US dollar would be particularly vulnerable to a US debt crisis. These countries often peg their own currencies to the US dollar, which means that their currencies move in lockstep with the US dollar. If the US dollar declines in value, it would also cause the currencies of these countries to decline in value. This would make it more expensive for these countries to import goods and services, and it could lead to a recession. A US debt crisis is a serious threat to the global economy. It is important for the US government to take steps to reduce the national debt and to restore confidence in the US government's ability to repay its debts. The US government is taking a number of steps to avoid default risk, but it is unclear whether these steps will be enough. The US government is facing a number of challenges, and it is possible that the US could default on its debt in the future.